Ladies and gentlemen, welcome to the SoFi Weekly. Today, I'm here welcomed by two special guests, Roy at cross_roads and Tevis. Another guest that we have, Tevis. Now, the great and powerful Roy is here.
The great and powerful.
Check from everyone.
What's that?
Celsius check.
Oh yeah. I got a little peach vibe today.
Yeah.
Had to hunt for this one. I was actually kind of surprised. It was like hidden in back on a top shelf, and there were not a lot of Celsius. So not an investor yet, not a sponsor. But if Celsius wants to sponsor us, I don't think we'll turn that down.
We'll not turn it down.
We'll try it.
Tevis, I didn't see a Celsius.
Oh no, I'm drinking a Celsius.
What flavor?
Oh.
Are we vibing?
Yeah.
We're vibing? All right.
Yeah,
Tanner, what you got?
Tropical vibe. You'll never see me with a peach vibe, or not often, because I trade them out with my girlfriend. I say, you take the peaches and I'll take the orange and the tropicals. So I try to get rid of them if I can. They're not my favorite.
Where's your straw, Tanner?
That's good. That's a good one. Okay, so let's talk a little bit of SoFi, and then we can wrap this crap up, and then get into Tesla news.
Tesla Weekly.
Yeah. No, actually, there's a lot of exciting things. We've got a couple different analyst reports this week. We also saw pretty interesting stuff happening with their credit cards. A lot of people saying that their credit limits are getting cut. Bank earnings today, so that was pretty interesting for seeing their deposits and where loans are going, these sort of things, and we'll see more of that information next week as well. Did you guys also see the Dan Dolev video that happened today?
Yeah.
So he actually thinks that personal loans will accelerate and actually see growth year over year, no contraction. So I thought that was interesting. Tevis, what else would you like to talk about, my friend?
Short interest came in for this week. There's also the partnerships with Wyndham Clark and the NAR that happened this week. We can talk about the Biden plan to cancel student loans if we have nothing else to talk about. But yeah, lots of topics.
Gotcha. Okay. Where should we start, do you think?
Student loans.
Biden student loans. Are you guys worried? He's talking about cutting, ton of loans that might even affect up to 30 million students. Or was it 20 million?
No, 30 million. And it's a lot of these are people that have been paying for a while. Usually they'll grab further than they actually are able to do. So I don't know that 30 million people have their loans forgiven. It's not guaranteed. We've seen that this is a battle as well, politically somewhat, but in the courts as well. So those that will just have the loans that they've issued just be forgiven. They're not always happy and thrilled with that. So time will tell, but largely this is a political lever that can be pushed to get a few more votes. So I think that's mostly what it is. We'll have to see. I was actually surprised as many went through as previously as before. So, but as far as student loans, I know we'll have our predictions a little bit closer to earnings time. I'm not expecting much from that segment really until we get to the third quarter. I think we'll start to see that ramping up, and then the fourth quarter we're going to see a lot of that as some of those penalties really start hitting. But for now, it's tough. It really interest rates need to start getting cut for that segment to grow. SoFi will do fine if interest rates aren't cut, but who wants to refinance at the current interest rates? A few people, but most people won't be helped by it necessarily. So,
yeah, the way that I said about it on the channel most recently is that I think, the people with the 780 plus FICOs and 170,000 plus income doesn't really fall under a lot of the stipulations that Biden had laid out. And so I really don't think that this is the same demographic that Biden is talking about, right? These are people that really need the cuts versus the people who would really prefer the cuts, which is more leaning on the side of SoFi's demographic. Tevis, I see that you're out $20. What just happened?
Yeah, I bet on this dud, Wyndham Clark. I also just I I watched them the other day, and I was like, I don't understand like anything that's going on. They're just like, I was like, he's on, and then he was on for 5 minutes, hit one, and then he wasn't on for like another 2 hours. I was like, yeah, uh, I don't get this. I was like Googling what is a birdie, what is +1, like, anyways.
Well, you really don't know golf to that degree?
No.
Okay.
I know that they have to get it in the hole in as few hits as possible.
So true.
I don't know. I don't know anything else beyond that.
Gotcha. Okay.
Okay. So student loans.
Glad the program is working. I thought for a second it wasn't working, but I made sure it was on, and it is on. So Tevis will get highlighted if he does laugh. Sorry. It doesn't really work with Roy, but with Tevis it does work. But if he's blocking his mouth, it might not work. We'll have to see. It's definitely a smile. See, there it goes.
All right. Are we still talking about student loans?
Yeah, go ahead.
Yeah, I don't think it really matters for student loans. Like, they did this in the midterm, and they're running the same playbook now. And we know what happened after the midterm. Nothing happened. It got shot down. And really, the message to be telegraphed to ordinary, everyday people is don't hold your breath, don't get your hopes up, because this is not something that the president has in his sole discretion to forgive. He needs a whole bunch of hoops to jump through in terms of approvals, and this is just a promise. It's a very well-timed promise. Unfortunately, a lot of people are going to go for that. I saw this post on on X, where after Biden sort of made the tweet, or his team or whatever made the tweet that they're, canceling 7.4 billion or something to that effect, the comments were like, oh, I wonder what states these students live in, because, and I think that's so telling in terms of, okay, this is a promise that's forward looking. It's not like, it's going to happen tomorrow, and it already got shot down once. So what makes you hopeful that it's going to happen again? And then the other thing to mention is that the main negative for SoFi the first time around was the moratorium, which is not on the table to be coming back. Student loan forgiveness doesn't apply to SoFi's core ideal customer profile, their core demographic. It's more affluent, higher earners. So they wouldn't even fall under that loan forgiveness, regardless of what Kamala Harris says, that they're going to forgive literally everybody, regardless of income. I don't think that's a very feasible plan. So anyways, it's pretty much just lip service, in my opinion. You're on mute.
Sorry, I was shaking the cup, so I muted. I did want to go on to, now that we have 200 plus people, thank you all for being here. I wanted to ask you guys, do you guys think, just for your own portfolios, not sort of a strategy for anyone else really, but SoFi has had a track record going into earnings of potentially beating the stock, moving double digits in percentages for potentially a short period of time, usually one day or potentially 1 week. Is this something that you guys think is a potential trade for yourselves?
I can go with my trade, but for me, it was just, so my plan, if we go to $10 plus for this earnings, I'm probably going to cut some of the January 2025 leaps, because that's going to be back in profit. Right now, it's not, because we've just been sort of going horizontal for such a long time in the $7 range for a couple of months now. And so the decay on those is getting ugly. I'm either going to take the proceeds from that and buy 2026 sleeps, or buy underlying shares at whatever the price is, $10, $9, doesn't really matter. I mean, I've bought at $10, $9 before, so I'm not really shying away from that for a long-term hold. But in terms of those January 2025s, depending on the strike price, I have 15s, I have 10s, and I have 5s, I think. Depending on the strike price, I'm probably going to reduce my risk in those leaps, and I'm still going to keep the 2026s on.
Roy?
Yeah, I'm kind of similar. I with the 2025s, we're not quite there yet, but I start to look at rolling those out further if they've not done what I wanted. I've already sold in the past leaps that I bought them back again, so I think that my initial outlay is covered. But no, if we run up again, I'm going to look for an opportunity, just like Tevis had said, to either buy the underlying stock. I'll probably do cash secure puts, and if they don't land like I expect as we fall back down, I'll probably shift some into 2026 leaps or just shares. It'll probably be a combination of both, most likely. I don't. The money's all going to go back into SoFi one way or another. I'm not leaving SoFi just because we get to like $10 or $9 or 11 again. I don't know. The other thing that I'm doing as well, and it's a gamble. I don't always do this. Maybe I'll like once a quarter. I've done it a little bit more often this year. Made a short-term bet, and so I have June. I'm not sure what the date is there in June. It's the quarterly date for $10 strikes, and I have like I don't know 25 call options, so nothing too serious. And I'll take them off the table if they don't end up running, and I'll lose a little bit of money. That's fine. But no, if we fly up after earnings, like I expect, I'll take some money from that and I'll buy more SoFi. So, but it's trading SoFi for SoFi. And I think that stocks, I mean, they have personalities, and we know what SoFi's personality is. We're not the only ones that know it. Even people that don't follow it very closely just know this repeated pattern that's lasted a few years now, where it pops up because it is a triple beat again, and then the stock comes back down. One of these days, the pattern will break. It could even be this earnings. What I'm very confident of is it's going to be a triple beat. What I'm not confident of is a stock price action, just because so many people know it, predict it. Some people will absolutely front run it. And so, if we get a run up into earnings before earnings, I will take some of those June strikes off the table too, just because I know some people will try to be front running that just because it's a predictable thing. But I don't know. Anything could happen. Short-term bets, it's an absolute gamble. The leaps, once I get about 6 months out, I really start looking to roll those out. And by 3 months, I'm out of them completely or I've rolled them. So it's about that time to look.
The thing to note there is that we can very easily spot the pattern at this point. It doesn't take, a market expert, because it's repeated so frequently over the past, couple of years. The more that it repeats in that range, the harder it is to break out of it, because you have the psychology working against you. And I think when it does break 10 or I think the high is like 11.7, something like that, then people will start piling in, the algorithms will pick it up, and it has the potential to go much higher. But that's the critical point where you have all of that selling pressure when you hit 10, because everybody has seen the pattern play out 4 times successfully now, that it hits 10, it goes back to 7. And so they're going to be immediately putting in sell orders and putting that downward pressure on the stock. So you need something really, really strong to help it reach that escape velocity out of that range.
And I think I know what that is. As far as the actual stock, I'm not sure, but SoFi doesn't have a significant amount of institutional ownership. It's when the institutions are like, hey, this is it, we're buying. And it's other than Cathie Wood. Cathie Wood will trade in and out, just like retail, honestly. But most institutions are not like that. They will buy and continue to buy and continue to buy and just hold for like 10 years and buy a little bit in and out here. Once, whatever SoFi does that impresses institutions enough where they start coming in droves, and I think we're not too far away from that point as a business, that's when it will break the pattern. Absolutely.
I think.
Yeah.
Oh, sorry. I was just going to add that, you know what? I think that we're in an area that's changing. We're going from a non-profitable company, still labeled non-profitable. And the more quarters we put behind us, the more that, SoFi will be labeled a profitable, sustainable company. I don't think that the fluctuation is going to continue. I mean, the pattern might continue for 2 more quarters or something like this of, these large bounces, but I think that SoFi will get treated differently because there'll be new institutions that have that availability of buying them. So, I don't know. Tevis, you were going to say something?
I was going to say that I think it's a good opportunity for us to pivot and talk about some of these analyst re-ratings. What we've been seeing over the past 2 weeks is analysts have been re-rating SoFi higher in terms of their price targets, and SoFi is now forming. If you go onto tip ranks or whatever, if you went on 6 months ago, you would say, here's the average analyst ratings. It's going to be like 850, and if you go on today, it's going to be higher because Citi, Deutsche, all of the even KBW went back to 750, and everybody's just going a little higher. Interestingly, they're all going higher because of the 2029 convertible notes. But that's going to help change the narrative around the stock to the point where I think Barron's even called it a tech stock this week. I was like, what?
Surprising.
Right. So that and a long short interest. So we can dive into 2 of those. But Tanner, do we want a special guest to bring on?
I would like a special guest.
All right. I'll send them the invite.
Okay. Are you talking about the guest that I talked about? I would love a special guest. And it's not like Roy is like, is this the multi-camera joke or something?
That was the
No.
ultimate special guest.
What?
That was the extra. Oh, yeah. Somebody said, Steve, please. It's not him, but when he is back, and one day he will come back,
He will
we
be
have
back.
to remember to do that. Bookmark that. That's a great idea.
Everyone,
Jamie
please welcome Jamie Dimon.
Just imagine.
Can you imagine? Yeah, congrats on the lovely earnings this morning, Jamie. You must be feeling great.
Yeah, I'm just his nephew or something.
Yeah. Like he's
All right.
just done with Yahoo Finance and CNBC, and he just comes on here afterwards.
A lot of the information that we collected about the convertible notes and understanding that offering actually came from a few very smart sources. This was one of them. I'm just going to say what their name is under the tag that they put, whether or not they want to remain anonymous or whatever. But everyone, welcome Martin.
Hey guys, thanks for having me.
Hey,
how you doing?
Doing good. How are you guys doing?
I'm doing great.
So for context, when the senior convertible note news broke, Martin, who works in the banking space, helped us break it down more in just our private SoFi chats. And so everybody in the sort of SoFi analysis community, Chris Hager, Vadim, all these guys, Martin was in that group with us, helping make sense of that news, which led to a couple of things. It led to the video that I made, the whiteboarding video, a couple of the things that Uncle Bruce was saying. He was helping us digest the fine print in terms of when that news when the details on the convertible note offering came out a couple of days later. So yeah, good to have him here.
Are we able to ask?
Sorry for not having the camera on, by the way. I've been feeling a bit bad these couple of days, so yeah, not in the most presentable.
No, that makes sense. Martin, I just want to ask,
yeah.
Am I able to ask what you do for a job? Like what industry you're in?
Yeah, so I'm in finance. I'm in market risk. I'm a group manager. I work for a legacy bank. So my education was also evolved around finance. So I was quite familiar with some of the terms, and these deals are becoming very mainstream. I know a lot of people initially they were scared of what this deal means, the stock price action, but I personally try to not focus too much on the stock price, but rather why it was done. And Noto on the talk with Jim Cramer, he couldn't have explained it better in a short, concise way. And I feel like people should just take it for what he said. By a simple Google of, those term deals, you could see at least, I don't know, 100 other companies doing similar deals where the terms and the writing and the wording on the deal is almost identical. So that in itself can tell you that this is really standard. Personally, I think it was a really great move by Noto, simply given that he retired some higher interest debt for some much cheaper debt. And I think for one of the pieces, he didn't really have a choice. His hands were tied. So it was going to go from like 12% to about 17%, and he couldn't even do anything for the next 5 years if he didn't do it by May. So I think it's a very smart move. It also frees up some capital. So I think they're in a great position to get the ball rolling. And for 2024, they're being quite conservative. So that also plays into that plan. And honestly, like, I'm very happy with how they're managing the company in such an environment. I'd be, some people would get more excited about, management talking about growth all the time and doing this, doing that. But reality is we're not in the best environment right now. We're seeing banks and, legacy institutions cutting back, cutting employees. And, that affects into us smaller companies as well. So the fact that they're conscious about that and taking that into account speaks volumes to me.
So can I ask, because we got introduced to you during the actual convertible offering, was this a position that you were interested in as well, or just trying to be sort of a good Samaritan and help a couple of normies understand more of a complex deal that actually happened?
I personally do hold SoFi. I was introduced to it by Tev a while ago, about 1.5 years ago. And I started, reading more and more about it. And, working for a legacy bank, you also start seeing some things that work better, things that could be improved. And, being of a younger generation, I can't tell you how many times I've been at a branch. So, those were small things that got me into reading more and more about SoFi, and I just love the whole fintech side of it. So the management team has also done tremendously. Like, in the last 2-3 years, this environment has not been great, to say the least. And for them to every single time beat expectations, stay calm, have the ability to shift from one business to another, depending on the macro environment, it's just phenomenal. So yeah.
Do you guys have any questions for Martin, or can I go ahead, Roy?
Well, I do. So you mentioned, interest in the tech platform. Why do you think it is that so many that are, as far as analysts and everything, are looking at the company and just overlooking the tech platform for the most part? We've seen a little bit of shift. And what would you guess it would actually take to kind of shift that perspective?
So, like, I'll put it out there. The problem I have with a lot of analysts is they're very short-sighted. First, on their ratings are usually for a 12-month period. They're not going to give you ratings on, what's going to happen in the next 3-5 years and whatnot. Also, another thing is I don't see SoFi rating other banks or other institutions. And the real story here is SoFi is going against giants. So going against giants, you're not going to have an easy path. You're not going to go down without a fight. So, you have to think about all that. There's a lot of stuff that goes on the background that people don't necessarily see. I'm not saying that I've ever been part of those things or seen that happen, but I am a firm believer that the world we live in is not all rainbows and sunshine. So SoFi has a great product, has a great management team, and I just tend to focus on that. I don't care about the stock price. I only see that, hey, if it's 7.75, even if it goes to 11, am I going to sell? Heck no. So if it's 7.75, I'll keep buying more. Management hasn't given me a reason to not believe in them. In terms of the tech platform, as I said, analysts are very one-sided, so very few of them are going to have, true, honest research. And, legacy banks don't really have the biggest, or I guess the best tech stack behind them. And probably one of the reasons why SoFi hasn't really announced anything yet is simply because if they come out and say, hey, we have a deal with Citi, that is also a acceptance on Citi side that their tech stuff sucks. So it gets the ball rolling from there. But yeah, I think they just want to value it as a bank because it's more beneficial for them to value it as a bank. The tech platform, I think, is going to be a giant beast in the next couple of years. But yeah, we'll see. We'll see how it happens.
I wanted to ask because I still see a lot of questions come up regarding the convertible note offering and whether or not them getting rid of the preferred shares and some of the higher cost debt that they had. Sorry. Do you think that this will actually bring more EPS to the bottom line? And how does the dilution play into that? And I'll ask you another question after that regarding it, but maybe I won't swamp you.
Yeah, so for the dilution piece, I saw a very interesting comment when this note thing was being talked about. If, them having more capital on hand and having more flexibility on doing things leads to more improvement in the business, and then all of a sudden, that dilution, through some math calculation, would happen to be around $16, $70 and $17 and so on, because that's why they had those call options to protect themselves up from the dilution up until that point. But if you have a stock price of 30, 40, we're talking what now, 5x from here? Like, would you really care?
Yeah, exactly.
How much of a dilution is that? Like, bring it on to me, in my opinion. So
for context, why this is still relevant and important for just people watching is because all of these analyst upgrades are all quoting the convertible notes as the catalyst for their upgrade. They're saying, we looked at SoFi in January and we looked at SoFi today, and the balance sheet health is considerably better because they have lower amounts of debt. And as a result of that, they're going to be retaining more of their capital. Their capital ratios are also increasing quite significantly. And as a result of that, once they plug it into their models, their expectation for Q1, the Citi analyst said basically, as early as Q1, we're going to see benefits of this. And that's why they're raising their price targets. And so all of this stuff is very related because that convertible note offering is what's changing the tide from a sentiment perspective from all of these analysts. And they're all just dominoing in one by one, starting last week and even this week with Deutsche and Citi, and probably next week as well, as we head into earnings, all because of this deal that Noto did. So it's still very much relevant because everybody is expecting to see the benefits from this.
Yeah, at the same time, though, like from these analyst ratings, like, I think one of them upgraded from like mid 7s or 8s to like 12 with a hold. How is a 50% upside from here a hold and not a buy? So like just seeing that, I don't even care to read what their reasoning is. And like they like the analysts, sometimes to me they like to play catch ball and like try to be in the trend. They'll put stuff out there all in unison and all of a sudden seem like, hey, we all understand what's going on here. And then, SoFi stock price goes up to 15, 16, and then you'll see upgrades of prices to like 20. And they're just, again, playing catch ball. Similar thing happened with Palantir. You see similar things happen with Robinhood, other stocks out there that, have, big spikes in prices in a short time. So, don't take those ratings like $11, $12. Like even Dan Dolev, like he lowered from 15 to 12. I wouldn't be surprised in 6 months if he goes to 15, 16 again, with no like super shift in news. So again, just take those price targets as a very short term, because there are clients that they are sending these ratings to, and they're in the business to make money. And usually for big institutions, making money is not 5-year terms, 10-year terms. It's usually very quick turnovers. And it's not a mutual fund or ETF like Kathy Wood, where she can just easily say it's for 5 years. they have to, keep reiterating, re-giving research to their clients, and that's how they can keep them locked. That's how they can get their money. So,
but you wouldn't say that, or well, I don't want to say you wouldn't say. Would you say that these analyst price targets are an attack on SoFi, or just sort of misinformed in that they're making short-term bets? Because we hear some comments that this is large banks trying to put, a hamper on SoFi to try to hurt them in any angle that they could possibly do to sort of stump that competition. Do you see it in that direction at all?
I see it in like, I'll give you just a quick analogy. If SoFi was, for whatever reason, $13 today, you'd have the same news, same everything, right? You'd have the price targets of the same analyst at about $17, $18. Whereas if you have an analyst where the price right now is at $7.50 and they give all of a sudden $20 price target, their managers, people are going to come out and say, are you insane? Like, you're talking about 150%. Something must be wrong in your analysis. Right. Whereas when you're talking about 50% upside potential, then it's a lot different. It's a lot more reasonable. People will take it a lot more seriously. That's why I'm saying, like, as stock price moves in time, they just play catch ball and they just bring out new reiterations, new ratings, just to, be more reasonable in that aspect.
So no malice intent, just trying to be reasonable in their direction.
Some of them, yes. So like the Truist guy, like, he has a really good analysis. Some of them really do point out real risks with SoFi that everyone should consider, absolutely. But some of them are just ridiculous. Like, the $3 price targets, like, you don't even consider the tech piece. You're just a joke of an analyst at that point. And from the ratings, you're the 7,499 guy out of 7,600. Like, how can I take you seriously? Your average return is negative 30%. And now all of a sudden you're going to be the genius to call this like massive short. And remember, SoFi is a real bank. They're getting audited in and out. You have internal audits, you have external audits, and I cannot stress enough how stringent those are. At our bank, we get all sorts of questions and they'll dive deep into every single thing they can. So the fact that SoFi is getting audited both internally and externally and getting signed off on those audits, and these are big institutions that are providing those sign-offs. We're talking about Deloitte, we're talking about, Big Fours. They're not just going to mess around with SoFi financial statements and just, sign off for no reason. So that gives a sense of comfort and of safety with SoFi. And I feel like some analysts or some people are just banging on the idea that, hey, how is it possible that this small company has performed so greatly in 3 years? It must either be a scam or they must be messing up something on their financial statements. And that I firmly do not believe. So that's why there's no chance I could give this stock like a $3 price target. Like, it's just a joke.
So I think that it's best, I think, because the perspective that you bring to SoFi stock is super unique because you're very much in the what did you say, the credit risk market risk. Okay. In that case, I want to keep you sort of where we could really learn something from, but also I wanted to ask you questions about the short volume that we're seeing, the short interest, because this is insane what we're seeing at highs of 23%. I think it's currently 17% short interest. What are institutions doing here? What's the play that's going on from your perspective?
I don't have like a full-on definitive thought on that. Like, I don't want to say, institutions are manipulating. I never want to lean towards that. But I can say, like, interests are aligned out there. So, you have institutions working with hedge funds and mutual funds and, big clients. And, hey, if you want our business, blah, blah, like, there could be, hedgy stuff out there. So 17% to me, it's okay. It's whatever. Like, you've had Tesla with higher percentages. You have these stocks. Like, I don't really tend to place too much emphasis or importance on those numbers.
Sure.
Also, to me, it's kind of stupid shorting over 20% at a $7 price target. You're like, at a current stock price of $7, like, you're almost saying this company is going to fail. And for the reasons I explained earlier, I don't think that's going to happen. So yeah, it's a lot of question marks on my head. I don't really want to, say anything definitive. I don't think too much about it, to be quite honest. So
I was seeing some comments that, the strong volatility in the short interest could be hedging as a result of the 2029 convertible note deal, like the delta hedging strategy in general, or the note holders, essentially the ones that get the notes and give the money to SoFi to buy the notes. They're the ones that are shorting. Is there anything there? Maybe, I'm not sure if you can, but to expand on that, because this went from 23 to 17 in a matter of 2 weeks, right? And so that's a pretty big fluctuation in such a short period of time, in such close proximity to that convertible note offering.
I don't know too much details on exactly how that delta hedging would work. I do know, however, that some of the players that are involved in those convertible notes and that buy those from SoFi, they might have the interest to short the stock, especially because you're going to get a smaller price when you can convert shares. So you effectively get more shares from that note. So that initially is what you saw the stock price reaction. Noda also explained it on Jim Cramer. It also has happened with a lot of companies. It's happened with Uber as well. But yeah, that initial stock reaction is known. It has happened with other companies before. So there's definitely, I think, some sort of strategy behind it. And it also coincides with, the short interest dropping materially these last 2 weeks without any, reasonable major news coming out. So, but yeah, I don't know exactly how they can, or how the hedging works, and, who sells what specifically. But yeah, I'll probably have to look into that.
Martin, I also got asked in the chat from Sagig here. They said, can we ask Martin how likely he believes SoFi is an acquisition target, potentially from other large financial institutions, perhaps?
Could be. Probably not right now. I don't think right now. I also think Noda is going to do anything he can to not be acquired. I don't think he's going for that deal. I think if he was thinking about that, he probably would have thought of a way out. I mean, stock price has been really compressed. We don't even know if he's going to get, his rewards by 2026. So if he wanted a way out, he would have found one. He rings to me like a champion of a guy, like an alpha male. So, he's in it for the win. I think he wants SoFi to be his legacy, how he is remembered. He kind of strikes me of similar to JP Morgan CEO, where he pretty much built it from ground out. So I think SoFi is here to stay. And even if it becomes an acquisition target, I don't think it's coming at a cheap price. So, I mean, we're all going to get rewarded if that's the case. But I also think that if they do get acquired, Noda is going to lead a good department. So it would make me interested in the company that acquires them. They will effectively own the technology and all that. So, it's you change the name of the stock, but thesis still stands on the other stock that acquired you.
I was going to ask as well, whenever, I don't know if potentially you have heard Tevis's comments about SoFi and the way that myself or him look into the company. Is there anything that you can add from your perspective on a different way of looking at this company, or something that potentially you think that we're just completely missing out on, or how potentially you value it or see it, or any risks associated with SoFi Technologies?
There's definitely risks in it. Again, like the macro environment right now is not ideal. Um, I think we still haven't seen, like the economy has been handled relatively well. You don't see big defaults, or you don't see, big unemployment numbers, which is the reason why they've kept rates the way they are. And, we went from all of a sudden 6 rate cuts expected to 2 or even 1 this year. So there are definitely risks there. I think this year and next year will be relatively tough unless things change. It's it's a situation I don't think we've had before, which makes it really interesting. And SoFi is an interest rate sensitive company. You're talking about the loan book and all these things. Like depending on how rates go in the future, that could really impact, how they decide to do originations or package loans and securitize them, and how they're valued. So that's a real risk there. And then their growth these couple of years has been really maintained by the loan origination piece. So if you have even high FICO score, people start defaulting on those loans, then it becomes a real problem. But the numbers are that the data is not showing that as of yet. And yeah, so I don't think there's a big concern at this moment, but those are real risks to be considered. And at the same time, the biggest risk I think with SoFi is you have a puppy going against bulldogs. That to me is the biggest risk. And SoFi is coming to eat their dinner. It's not, if you had a company that's going for Amazon or it's going for Google, and they're just such a small company, like think of the probability that, that happens. So that is something that everybody has to consider. But that's also the same criticism Tesla was getting, Amazon was getting at this time. So yeah, definitely be mindful out there. I think these are the biggest risks. I personally am at a young age, so I live by some ideals and morals, and I think SoFi fits all of them. As soon as I started my job, I've seen the world in different lenses, and I really stand by the morals of SoFi and the team, the management team. So it's something I want to support, something that motivates me personally as well. And when those two things match, it's a good enough reason for me to invest in. Once that changes, then obviously I will reallocate. But even in the case where SoFi doesn't, perform as I intended to, I'm at a young age, so I can recover that loss. So yeah, these are the major risks, I'd say. But again, you're looking at a great management team. It's a new fun thing. I don't know. I can't say enough. This company just gets me excited. I have majority of my portfolio in it, so as I said, because of my age, I can afford to do that. I can afford to take more risk, but everybody should be mindful of the macro environment we're in right now. And I think it's going to be tougher in the coming months.
So,
Martin, can I ask a question real quick? You mentioned
Yeah.
Robinhood and Palantir before. I know this is SoFi Weekly. I'm just curious if you're holding those personally, or if that's just you mentioned them as examples.
I just mentioned them as examples. I do look at them closely. I really like Robinhood for their UI platform. They're very friendly to use and user friendly. And I wish SoFi would also do something like that with Invest, but they're two different companies. One thing I didn't really like particularly in the last 2 weeks was when Robinhood came out with a credit card. Everybody was just jumping out of excitement. Hey, it's 3% here. Why isn't SoFi doing this? I don't like to compare one with the other. They're going for different market shares, and the UI, I don't think people invest in SoFi just particularly for the invest portion of it. I think it's a lot bigger, and that invest portion is actually just a small piece. So it could be a great. I mean, SoFi is going to be the one-stop shop, so it definitely has to have that in it. But just comparing SoFi and Robinhood, like it's not apples to apples to me. Another thing is a lot of companies right now are trying to be the exciting thing in the market. So I also saw the Robinhood, 3% credit card. It's a great idea, but the math really has to math with it. It's like, to me, it's a make or break. It's a risky offering, and also I also like to advise people that, when you see hot, interesting news come out, really read into it before getting excited. Because the first few days you had people talking about Robinhood. Hey, nobody's matching Robinhood. Robinhood was the most talked thing for those 2 days. And then the third day, the fourth day, people say, hey, but I don't get the full match unless I stay with them 5 years. Maybe it's not that great of a deal. And I was telling Tev too, like, Tev was so excited as well in the beginning. I was telling Tev, like, hey, if it looks too good, it probably is too good to be true. There's probably something in it. So it's a great idea, but they really have to hit every point to make it successful. And yeah, it's not something that, I would take money out of SoFi to put into Robinhood because of that 3%. Like, it's not that type of exciting. They didn't invent the flying car or whatever.
Yet. Just kidding.
Yeah.
And the fact I love more is that Noto didn't go after it. Like, a lot of people were saying, hey, Noto, what do you have? Blah, blah. He's a smart man. He's not playing cards because people tell him to. He's not going to give you a 4% credit card or 5% credit card so he can fight with Robinhood. He manages his company, and the dude stays calm regardless of, what's out there. And people like that, managers like that, CEOs like that, they survive. It's a long run game. It's who stays in longer. It's not who's more exciting in the next month or two.
Yeah, that's exactly how I see it. I have my SoFi is a very long-term position, and Robinhood's a trade, just because there's more cyclicality in Robinhood, and there's a lot of excitement, which is great for a trade, but long-term, like, they're just building a massive foundation, and I think that they're going to become an unstoppable juggernaut. But if they were just trying to copy Robinhood, there's some things that they could certainly do better and improve on, but it introduces an element of risk if they do something like the Robinhood Gold Card. So I love what I have. I love, that you have that same understanding of that mindset that what they're doing. So I appreciate that perspective.
Yeah, absolutely. And honestly, it would go against what they guided for. They did say we're going to be conservative. And now all of a sudden, if, they come out with these exciting stuff, like, I would see it as a sign of distraction. It would concern me more than anything. The fact that they're being conservative, the fact that we may see that on the first quarter, it's not going to sway me. They stick by their word. That's all that matters to me. So
do you have any unique Q1 earnings predictions, Martin?
I was on the list.
Well, I saw a lot of analysts didn't even put an average of like 1 cent. And I'm like, okay, guys, like, come on. It's not even like half a cent, let alone like 1 cent. So I don't think it's going to be a blowout. I think it's going to be around 1 to 2 cents. But members' number is going to be interesting. They signed major deals. The NBA deal, I think, is going to play values as well. We're seeing that logo everywhere. I mean, the NBA is one of the most followed leagues in the US and in the world. So having that major partnership, and also going for, top sports icons. Like, you have Jason Tatum, you have, I don't watch golf as much, but I saw that they signed a big guy on golf.
Wyndham Clark.
Yeah. So, they're going up. Like, you have to think about who the target market is for SoFi. They're young people, prone to technology, and young people tend to follow these sports and be excited about sports. So it all makes sense in that frame. So yeah, I think members numbers are going to come in good this quarter, but we'll see. I don't know too much about how the loan piece is going to work. Like, I don't. They did guide for 92 to 95% of what they had before, so it's going to be interesting to see how that pans out. Like Dan Dolev said completely the opposite on his interview, so that was quite interesting to me. So yeah, I mean, Chris has also said on a bunch of his tweets that this is the hardest quarter to predict on what's going to happen. But yeah, I do also agree with his opinion. So yeah, let's see.
Data-driven investing, right? That's who you're referring to?
Yes.
Okay.
Yeah. So yeah, it's going to be interesting to see. But yeah, I think we do come in at least 1 cent.
The last question that I have personally is what you referenced as, SoFi being a puppy versus these bulldogs. That's going to be pretty hard to go up against. Is it just mainly the management is what you're placing bets on, or what makes you think that SoFi even has a chance?
Management, I think, is one of the key pieces why people even invest in stocks. You have Palantir, people invest because of Alex Karp. You have Tesla. Take Elon out now and then see what happens to Tesla stock. You'll have it 50% down tomorrow.
Sure.
So because at the end of the day, they're the people that are making the decisions. They're the people that are, driving the company, and the stock price follows. They're not per se, looking at the stock price on a daily basis, not just going to their office and, banging their heads on the wall and saying, oh, stock's at 7.5. They don't care. They're getting members and all that stuff. Another thing, what has gotten me into SoFi is Noto knows the legacy world. He was in it. That's why I like him. I'm in the legacy world right now. I know it. So he did see things that could have been improved. And he said, you know what, I'm going to do it on my own. So he knows that side. He knows how they function. He knows the environment very, very well. And for him to take on this mission, he knows what he's up against. He was top rated at his legacy bank as well. So you're not talking about just, one CEO out of the blue. Like, this guy is, he's for real. So one of the biggest reasons I'm invested in SoFi is because of him. And I know that is another big risk, similar to Tesla, key man risk. Take them out of the equation. You have, different stories behind and different thesis.
Right.
Which is why, you have a lot of FUD around people like the president of SoFi Bank, like leaving. And, the CRO being replaced and all that stuff. Like, people place bets on SoFi because of management more than anything. And once that shifts, then it can change stuff. But yeah, I definitely think management is the major point here.
So can I ask you a question? Jonathan has a question. He says,
yeah,
is Martin using an AI voice digitizer to hide his identity from quote unquote legacy bank? You don't have to answer that one, Martin, but I thought that was funny.
Yes.
I don't see actually many questions. Everyone's just trying to figure out your identity. So I'll let you go scot-free. The whole idea of having someone like this on the channel is that you ask them, exciting questions.
Hold on. Did he listen to the Gary Gordon interview? Where do you think Gary Gordon is wrong, and what specifically? Tanner's biased, so obviously he's not going to pick up that question for you to ask because he loves Gary.
I swear I didn't see that question.
No, I didn't. I haven't heard his interview. What was it about?
That is the correct answer. Moving on.
Yeah. I love whenever I put the camera on Tevis, it just kills his mood. It's my favorite part of the podcast is how fast he changes. Look at him. Look, the camera's about to cut off in a second.
Martin, chances we touch $11 in May? I'm just reading. In May.
probably tough. I'd say around 9 is what we're looking at right now. Again, remember, they're being conservative this year. I do think we do see 10s again this year, but I wouldn't expect too much other than that. Again, there's a lot of uncertainty in terms of macro environment. It's not like a lot of the SoFi stock price is not also even related to SoFi. One other thing that I've been noticing, I do say that I don't like to follow the stock price, but as a matter of fact, I do have a bunch of stocks on my computer every day that I do see the price action on. And one of the things that would piss me most when I was an early investor into SoFi, I was emotional because, hey, I put money into it. I wanted to double in a month and so on. It takes a toll on you. Like SoFi, it's not for the weak. It's, this stock is, you need some, you need to be really good with your emotions to hold this stock because, it will go down on a good day and you have all the other banks or all the other tech companies going up and SoFi going down. So, it really makes you question your decision. But honestly, what I've loved with SoFi price action lately, it's not trading the same as a firm or Upstart. And you saw firm earnings before or Upstart going down 5%, and SoFi would go down 7 or 8 because of something related to them. Now it's completely detached. Like, I wouldn't be surprised if you look at their price action in the last 3 to 4 months and saw a very small correlation. So that detachment and SoFi getting its own identity is, I think, a shift in sentiment that is going to play volumes moving forward. And last year, you were building a base around $3-4. Now you're very solidly staying around 7.5. And it's early, guys. Like, we just had a first quarter of profitability. Like, how exciting is that? Give it time. It's a new company. It's a puppy, as I said. Let the puppy grow. So I think in a year time, we're going to see very different results. More funds are going to flow money into SoFi because of all the mandates they have. Some funds are not even allowed to invest in SoFi until they have a full year of profitability or until they're at 10 billion market cap. So for all those reasons, you see a volatility in stock price right now. But as they grow, as they show more stability and, profitability, I think that whole story is going to change.
What percentage of SoFi is Martin holding?
Oh, is that a guess, or should I say?
No, I'm reading one of the questions in the chat.
Oh, okay. It's 60% right now.
Sorry, can you say that again?
60% of my portfolio right now.
Do you only hold common shares?
Yes. For reasons that, unfortunately, I can't play too much with options because in legacy banks, when you work at certain departments or in any institution, that is handling with clients or dealing with clients, there are very strict trading policies to where you are supposed to only hold a position for at least 30 days. You're not allowed, very frequent trading. And I wouldn't like to, buy options and not have to make a decision or do something with them. Options are very powerful. So you need to really know how to handle them. And, having that trading restriction up, unfortunately, it's not worth my time right now. So I'm just building a position and holding common shares.
So could I don't know if I understood that. Are you saying that the bank that you work under is controlling the way that you trade in your personal account? Or are you talking about a corporate account or some sort of like money that you're managing for clients?
No, it's personal account. So, you work for a legacy, you work for a bank, let's say, right? Your whole paycheck and your whole investment accounts need to be with the bank. And in that trading policy, there are different time frames where you can trade. So there's certain stocks that you're not even allowed to trade because the bank has, ongoing relationships with them. So that's like a trading restriction, for example. Another trading restriction is they don't want you to be going in and out of trades because during market hours, you're supposed to be doing the job for one and not be trading stocks.
That makes sense.
And at the same time, they don't want you to, create volatility in the market and, be doing all these kind of things. So They only allow you to buy a stock if you're holding it for 30 days, and only in circumstances where the stock price, let's say, drops at 30 or 40%, and you just want to take your money out so that you'll have more losses. They do allow you to sell the stock. But other than that, you do have, unfortunately, that 30-day restriction, and they do monitor that. So some people also, they have to ask for permission to trade a certain stock before they trade it.
I was
So
going to say, do they also monitor the risk of your portfolio as well?
it not necessarily, because it's my own portfolio, it's personal. It just has to be a verified portfolio. Like it can't be, let's say, with Questrade, let's say. Like Questrade is in one of their like non-verified whatever dealers, and every time you trade or place a trade with them, because their systems are not integrated to the point where I have a full view 24/7 of what you do. So every time you trade, you needed to get permission. But if your account is with the bank itself, then they have full, monitoring on it, and it's very easy for them to raise flags or do anything like that. So for reasons like that, and for the fact that I just want to invest long term, I could buy leaps. I've been thinking about that. I mean, it does fall into things I'm allowed to do essentially. So, but yeah, I personally have just wanted to build my position at these low prices, and I've just gone for pure common shares.
Well, perfect. Roy, Tevis, do you guys have any other questions, or?
I'm curious if there's any interesting insight given the background in risk that you can share from just a legacy bank perspective, or any interesting perspective in that sense that corresponds to SoFi or the entire industry. Like, I'm sure a lot of people in the chat didn't know about the restrictions that a legacy bank would put on your personal account for, you have to disclose these trades. And even though it's your personal account, there's a lot more like that you encounter on a daily basis that gives you an edge in understanding a stock like SoFi. So if there's anything that you can think of like that.
Yeah, so on my day-to-day job, like, honestly, like, some of these restrictions, they apply more to certain departments than others, but you have to think, like, some of these institutions, they only have one department dealing with one HR department or one governance department dealing with 7 different branches of the bank or subsidiaries of the bank. They don't have enough people or enough time to make the rules different for each separate department. So some of these, like the information I deal on a day-to-day basis, even for the stocks that they have on their full restricted list, I don't have superficial information for me to go on and make a decision that, hey, this is a buy today. So I don't deal with that type of risk. I mostly deal with risk on the full sense of the bank, on the top of house level, where products that the bank deals with the clients, how much losses they're exposed to on a daily basis, how much they can lose with a certain percentage of confidence in the next week or so, and be able to communicate that type of risk to leadership so that they can place the appropriate limits and the appropriate strategies to the trading desks. So I don't have any information on stocks per se, but I do take care of portfolios that do trade stocks, but not on a proprietary basis. They're mostly trading stocks or holding positions to make a market for clients.
So you're like the nerdy analyst from Margin Call saying that.
I'm thinking of that.
Yeah. Well,
I like sure that the trading guys need to start doing a fire sale and.
Yeah. No, I like to be the guy who builds that house of whatever Jengas, and I do have the analysts who say, "Do you see my mathematician here?" But
oh, okay, I know you're talking about the quant.
The quant, but no, I do deal with a lot of numbers on a daily basis, and I can say that like 100% of the macro environment is not as stable, because we do get a lot of workload when the market is volatile. There's certain portfolios that are exposed to more volatility, so yeah, definitely the workload is out there, whereas in more normal times it will be a lot easier. So it's not a great environment, and there's again this huge uncertainty on what the actions are going to be. It's an election year. You have Biden coming out and saying, there's going to be a rate cut, and then for all we know, there should be a complete independence between Fed and the president. So it's like, how is he coming out with these statements? So the market is very, very volatile because it doesn't know what to read from who at this point. And until we get a clear picture, I think it's just I just like to see it as an opportunity for me to grab cheap shares from companies I like. And it's getting very hard out there to read the correct information. So until we get a clearer picture, it's going to be a bit of a rocky road.
Mohammed put a good question in the chat here. He said, whenever you're looking back on the convertible note deal, what did you think about the actual stock price and how it reacted to that deal versus what you know about it?
So as I said earlier, like that stock price drop is expected. And it did happen with a lot of other companies that do these types of deals. So it's a known thing as soon as the announcement comes out. Again, it's not ideal because for a lower stock price, the convertible notes can be converted into more shares potentially. So that means technically more dilution. But that's why they had that, protective call option. So
sure.
Up until a certain point, that doesn't really matter. And then, as I said, like if it goes to 20, 30, I don't care, right? I've made my money. So it was worth it in the sense that I was able to get some cheap shares because I know how these deals work. And I knew the purpose of that deal. I knew that Noto was, essentially refinancing a 12% loan with something much cheaper, getting rid of those preferred shares. So on that sense, it only made sense for me to buy. And a lot of people that did, I think, like even for a swing trade, it was good. But yeah, I didn't make much of it. Like it wasn't a moment where, the stock price dropped 15%. I didn't think it was granted to drop 15% in all honesty. But the fact that it dropped 15% is not like I was like, oh my God, let me sell. No, like I just went out and bought more.
Well, Martin, this has been awesome. Everyone, please give a big thank you to Martin in the chat because this was great. And hopefully you join us even more. And you're more than welcome to join us in the after hour show if you have the time. If not, if you're not feeling great, that's perfectly fine as well. But you might hear it from Tevis afterwards. Is there anything else, Roy, Tevis, that you want to say before we wrap?
No.
Well, until next time, guys, thank you so much for watching. Bye for now.